Biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, September 9th. I am, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, hi, Anna. How's it going?
I'm good. How are you?
Doing well, yeah.
Good. Okay, we're going to talk about what happened in the market, but probably start off by saying that, as most of you probably know, yesterday, unfortunately, we lost Queen Elizabeth. She died at the age of 96, and she was the queen for 70 years. So, RIP Queen Elizabeth. Very sad that that finally happened, but she had quite a big and full life, huh, Bruce?
Yeah, she sure did. I mean, it's hard to fathom all the different political leaders that she, ran past with, and all the different changes that she would have seen in her life as both in her life, but also as the queen.
She spanned 15 prime ministers. Winston Churchill was her first. One thing I thought that was interesting that England came out with before we jump into things was that in honor of a mourning period for the nation, they have halted an anticipated interest rate hike until September 27th or 22nd. I thought that was interesting that they are letting the nation mourn and not feel the pain of more interest rates, huh?
Yeah, that's interesting.
Okay, we're going to talk about the market. RIP Queen Elizabeth. We're going to talk about market sentiment. I don't think things are going very well in that regard. We're going to talk about the US dollar, some emerging trends that you're going to tell us about. We're going to talk about interest rate hike that did happen in our own country, and some unemployment information that's going on in Canada. And then, of course, we're going to get into some CSE Issuer news. So what's going on with market sentiment?
Yeah, I mean, we sound like a bit of a broken record here. Last year we talked about sentiment being at extremes, and this year we're talking about sentiment being at extremes, but to the low side. So the one of the charts that we have here is the bull bear chart. So this is looking at the bull bear ratio, and if you look at the chart, what we have on the bottom there is we've circled where the level is right now, and it's never been this low before. So this is actually a 40-week moving average, and you can see that even in the depths of the great financial crisis in 2008, 2009, it didn't get this low. So it just tells you how pessimistic these investors are. So it's a little bit crazy. If you look at the next chart, what this is showing you is also, so that first chart was looking at pessimism for individual investors. That comes out from the American Association of Individual Investors. It's their survey. But this is actually what really institutional investors are doing. And they've taken their money and made a massive position in puts. And you can see this has actually been dollar adjusted back to 2008. It's larger than 2008, but if you dollar adjust it for the size of the market then versus now, then you can see it's right on par with what happened in the great financial crisis. So if you think back, the great financial crisis, we were really concerned about whether or not the financial system would freeze up completely or collapse. And that's how worried we were back then. And now investors are also equally as worried now. If you think about what success they've actually had when they've entered into these positions, it hasn't really been a lot of success. They had a fairly large position back when Lehman went bankrupt, which was the beginning part of 2008, that they made some money on. But other than that, generally when they get into these big positions, it's late. And, that's one of the emerging trends that we've seen, and we'll sort of talk about.
Okay, so I remember the feeling in 2008. And one thing I thought was interesting, and showing that chart makes me wonder if that's where we're at, where there was a bit of a shattered moment in investors, in that things that they never thought could have happened. And that was an unfortunate awakening. Do you think that's kind of where we are again? Things that people didn't believe actually could happen have now happened?
In certain areas, for sure. If if you lived through, kind of the 2000 to 2003 period, then you would have definitely seen, a lot of damage done to stock prices in the technology sector. And, some of those were actually bigger. You saw, a lot of the companies that were pre-revenue go completely out of business. And the one that, kind of everyone points to is pets.com. But if you, if you look at some of the carnage that's happened this time, there's a lot of people that are probably looking at individual stocks and are surprised at how far down they've gone in, what seems to be still a fairly strong economy, just as sellers have just said, get me out at all costs, and they've just pushed those down. So we certainly have seen, those changes happen. From an interest rate standpoint, this is one of the fastest interest rate moves that we've ever seen in history.
Wow.
And so, I'm sure there's some people that have borrowed money and weren't expecting the rate to rise, who have just said, like, there's no way I would have thought it would have risen this fast without me being able to do something. And that's, I think there's probably a lot of people in that situation. So I would agree with you that, there's certainly things that have happened that most people probably expect never would have happened.
Yeah, absolutely. Well, hopefully things turn around. What's going on with the US dollar?
Well, why I wanted to highlight the US dollar is kind of on what we'll also touch on the next point, is that we're seeing some emerging trends here that are taking place in the market, but a lot of it's driven by the US dollar. That's been, a place of safety throughout this year. It's had a fantastic return. If you just owned US dollars, you'd be up, double digits right now, which is, well in excess of the double digits the market is still down. It's probably one of the best asset classes you could have been in. But if you look at most standard metrics, it's pretty extended here now. We could have said that probably for the last 3 months for sure, but it is starting to get pushed to extremes, and we're wondering whether or not, it pulls back a little bit, and that's when we start to see other areas of the market start to emerge and perform. And you just look at the last 2 days, the US dollar's was flat 2 days ago. Today it's down, and the markets have had strong days both of those 2 days. So it kind of leads into the emerging trends that we're starting to see here.
And on that note, what are those emerging trends?
Yeah, I mean, if you look at the first chart here that we have for as far as emerging trends, is what we've done is we've just sort of taken a view back. The day-to-day noise is always there. It's difficult for traders and investors to separate some of that day-to-day noise. But what we've done is we've looked at the long-term momentum here. And so on the top pane of this is looking at the 2-year US Treasury yield. And you can see the massive move that it's made off the bottom in 2021. On the bottom, that's a momentum indicator. And so what we're seeing there, and this is a long-term momentum indicator, what we're seeing there is that the momentum indicator is about to switch and go negative. So the momentum was strong, started to fade, and now it's about to go negative. Why do we highlight the 2-year? Because that tends to be what leads the Fed as far as direction goes. And it's not that the Fed is saying, oh, we got to follow the 2-year, but the market is very wise when it comes to, what's happening. Back in June, there was this talk of the pivot that the Fed was going to take their foot off the gas, and the market rallied and then pulled back when, no, that wasn't the case. They were very hawkish. But if you look at the momentum of the 2-year, the price hasn't changed yet, but the momentum has started to change, and that's leading into some other trends. So if you look at the next chart here, this is just looking at the actual breadth of the market, the underlying market, and you can see, again, the top pane is the actual numbers, the actual number of breadth, but the bottom pane is the momentum. And you can see the last time it bottomed around the same, kind of similar level, similar pattern was in 2020 after we had COVID. And then prior to that, it would have been 2018/early 19 when the Fed was increasing interest rates, and they did do that pivot that surprised the market. And that was, kind of when it went straight down in October, November, December, was down 20%. They pivoted and on a surprise basis, and it went up. So what we're seeing is that breadth is starting to improve. Again, the momentum has changed. We've started to see a little bit of that breadth improve in the actual numbers as well. But you can see the momentum indicator has, sort of these long waves to it. It doesn't just go, sort of short up and down. So now we've come through this wave of declining breadth. all the sellers are pretty much exhausted, and now we're starting to see increasing breadth. And if you move on to the next chart, what we're looking at here again is, in this case, this is the IWC ETF, which is the iShares microcap ETF for the US. And so these are small companies. And why we highlight small is because investors typically, when they think that they can make money, are in small companies, but when they're fearful of the markets and the economy, they tend to move away from small companies. And you can see here again how much it's pulled back, topped out again, sort of that May, June, July timeframe, 2021, has spent the last, call it 12 to 15 months going down. And now the momentum's starting to change, and it's just crossed over positive. We haven't really seen a lot from a price change yet, but that momentum always leads the price change. And so we don't know if it's going to be 2 weeks or 2 months or 2 quarters, but what we can see is that momentum is starting to change. And again, when we sort of take a step back and don't worry about the day-to-day noise and focus more on the big picture, which is really what most investors should be doing, we can see that those trends are starting to change. And these are just 3 examples that we see. We see numerous examples. So we're thinking that 2023 could be another very strong year for the markets after having a very challenging year in 2022.
Well, I think that would be amazing if that were the case, because it's just been such an odd few years for the economy and for investors. So it would be great if we could all be back out there, and there could be some great upward movement. Okay, in Canada, we had a rate hike. How much was the rate hike?
Yeah, so the Bank of Canada raised interest rates here again, which wasn't kind of too surprising. We were all anticipating that was going to be happening, and we're probably, I think they're going to put it on hold for right now, is what they've said. We're probably going to see another 75 basis points in the US, and then they're talking about maybe a possible another 75, not all at once, but maybe 25 increments or 50 increments over the remainder of this year. So yeah, we saw another rate increase.
And you also mentioned unemployment. What's going on with unemployment in Canada?
Yeah, so I mean, the unemployment numbers came out today, and they dropped. It's probably not too surprising when you start to raise interest rates. They're doing that to slow the economy. We haven't really seen that to the same degree in the US yet, but we have seen it in Canada. So unemployment numbers ticked up, so employment dropped a little bit, and that's the effect that they're trying to have, is they want to slow down the wage growth increase. At the same time, they don't want to slow it down the economy too fast. So it's that delicate balance that they're where people have referred to as kind of threading the needle.
I think in general, we're walking on eggshells.
Yeah.
Between inflation and unemployment rates and the markets. It's definitely a very special dance. This is where governments, I think, really do have the ability to impact change, and that's how they handle these situations. So we'll see how it goes in the next 12 months, but hopefully it's on recovery. As you mentioned with your trends, we're going to talk about some CSE Issuer news. So this is obviously CSE Issuer, GAND Gold. So the reason I bring up GAND Gold, they just completed a private placement of $3.21 million. The funds will be used to further their exploration projects, which are in Newfoundland. And the reason I bring this up is because I saw a lot of press releases over the past few days, and I always look over the past week of money being raised in the mining sector. There's other sectors where I'm seeing money being raised, but the mining sector seems to be successfully raising capital right now. So as we talk about the markets and the junior markets really suffering right now, I find it interesting that I'm seeing so many decent capital raises. Do you have any comment on that?
Yeah, when we talked about breadth starting to broaden out, interest rates perhaps starting to lose their momentum on the upside, this is all built into what you're seeing when you look at there's more financings. Well, investors have taken a look and said, okay, we're maybe not done selling, but we've sold down a lot of the exposure that we wanted to have. Stock prices have come down. Now, when these companies are going to investors and saying, we want to raise money, there's a little bit more appetite. Certainly we haven't seen the floodgates open yet and have, crazy busy days of financings like, say in early to, or sort of mid to late 2020, early 2021. But we're starting to see more appetite for this. That's something that dried up 4 months ago. It was almost impossible to see a financing. And if you saw one during the week, it was probably a very small private placement that was done to insiders. Now
Absolutely.
you're starting to see those expand and broaden out. And that's just a function of risk appetite and, investors being more positive. And, maybe they haven't taken a look at the indicators that we follow and said, oh, this is the reason why, but they just feel, more positive about things because of price or level or both.
Well, here's the thing. When a company raises money or does a private placement, and this is something that investors might not fully appreciate, is that when you're buying and selling on the market, you're buying from another investor. These private placements really do allow the company to move forward, especially in exploration. There's very rarely revenue associated with exploration companies. So their only ability is to raise capital using the exchange so that they can further their project. I also thought these guys were interesting. So first of all, they have an impressive chart. They've done really well in these kind of, troubled waters that we've been in. They have 5 projects that are all based in the Gander Gold Belt in Newfoundland. And I've heard Newfoundland a lot also in the mining sector. Apparently there's a bit of a gold rush happening there. I didn't know this. Did you know this?
I had only heard inklings. We haven't really spent a lot of time looking at that, but I have heard inklings that there, was more exploration being done.
Yeah. And then, and the other thing is when you kind of take a look at these companies, and this is just a comment on, when investors are trying to figure out where to put their money, they have an impressive cap structure. They have no outstanding warrants. They have a lot of their lead investors are people like Eric Sprott and Sassy Gold. So they have kind of, when you start looking at that in these moments where you're looking at where do I want to put my money? Which exploration company do I want to put it in? I think those things really, they tell an important story and tell a story about the management team. My final question for you before we end off. So congratulations to Gander Gold. Well done on a great capital raise and good luck on your exploration. What are your thoughts on gold these days, Bruce?
Well, when we talked about the US dollar and the fact that the US dollar could potentially be topping out here, that would be very positive for gold. Gold has, relatively stuck in there. If you had only owned gold this year in your portfolio, you'd probably be further ahead than if you owned NASDAQ stocks or Russell 2000 stocks or, perhaps even the TSX, because gold's kind of hung in here. But gold and the US dollar are usually inversely correlated. So if we were to see a drop in the US dollar, that could be very strong for gold. And stronger gold prices mean stronger gold exploration and gold mining company shares typically.
And better markets. Bruce, what should we think about going into next week?
Well, the big thing is everyone's going to be watching on Tuesday is for the US CPI. So the numbers from August are going to be released. We saw the numbers from July. They came out. They were better than, or no, I guess not better than expected, but they went in the right direction. They were showing a slowing of inflation. The market will want to see that again. If it doesn't, then it'll probably be a very negative day on the markets. If you were to see a pickup in inflation again, if you see a slowdown in inflation, that could be positive because then the market will say, okay, well, it's going in the right direction. Maybe the Fed doesn't have to be quite as aggressive as they've been.
Sounds good. And I'm sure we'll all be watching TV and reliving the story of Queen Elizabeth a little bit. So listen, thank you so much, Bruce. Have a wonderful weekend and I'll see you next week.
Thanks. Yeah, you too.